Hello, everyone. Ben Bryce here. Today I'm joined by the ever-present Greg McBride, all-knowing. So here we go, Greg. You know, another day. We're finishing off the week, second half of the week. We got some export sales today, and really seems like the markets are loving it.
Yeah, I mean, it's more of the same, except that the corn seems to be getting worse. That's not what we want to see. This is actually what happens at this time of the year, but it does seem like it's getting worse. Beans were a little bit of a rebound this week. Still not good. We still suck compared to Brazil, but we're narrowing that range, I guess, between us and Brazil. So maybe we're getting a little more there. I didn't look at the exact breakdown to see who was buying, but a lot of what we've seen in the beans was sales that were previously made and just switched. So it's not like brand new sales. So at this point, I mean, the rebound in the bean side of things is encouraging, but it's not something to get bullish about.
Right, and I mean, you look at you talk about beans, but you look at that bean market, right? You look at meal and oil. Oil's getting hammered today because the oil market is just, I mean, it has shaved off what, $5, $5
or $6. Yeah,
and
it got ugly, and a lot of that is war. War is good for that kind of movement. It's been what's driving the energies plus the metals. We don't have that support today. You see the gold and silver are kind of quiet, and you don't feed the bulls right now, and that's what we talk about all the time. You have to feed the bulls, and we're not doing it. So despite record crush,
right,
we don't have enough to offset some of that export, and the exports always get the bulk of the conversation,
right,
until we move further into the age of biodiesel and renewable diesel, renewable fuels. Whether it's the airline thing or whatever, and the additional crush capacity, we're at the start of that. Once we get to that point, that's a good conversation to have. I'd love to have that conversation.
Well, we need to see something like that happen because these markets need something. I mean, you look at just, corn, beans, wheat is sliding off a little bit, but you look at corn and beans, we have had this story of we could be bullish, we could be bearish, and the market's trading that. I mean, look at where we've gone for the past month and a half. Beans sliding a little bit, but corn, we need something to come in here. Right? Yeah, it check the pulse.
Yeah, we need some. I think at this point we're not going to focus on South American numbers. The thing with Brazil and their overall production, whether it's corn or beans, the boots on the ground down there are much lower than USDA. What's going to happen is the USDA being as high as they are, Brazil being as low as they are, we're going to meet somewhere in the middle. And that's plain and simple. That's how it's going to go. Argentina's good, but maybe not as good as advertised. But notice in these USDA reports and what we get from Rosario Grain Exchange or Buenos Aires Grain Exchange or whatever, they're not touching those bean numbers.
Right.
They've left that 50 on there for months. Corn, it was way up. Now it's the same. So I what kind of a weather outlook do we need to get to give us a reason to put some premium in this market? Put some weather premium in, and unfortunately, it's past mid-May before we can start talking about that.
Okay. So grains status quo for now, and we need to see something come in and revive these markets. Or if it is what it is, and these are what we're going to be looking at for the rest of the year, then maybe look at getting some sales, unlocking some of those cash prices. Yeah. But when you shift your focus from grains to livestock, livestock's been pretty active here. I mean, we had all these rumors of bird flu. Those are kind of out the window. Nobody really cares about that. But cattle's still lower.
Yeah, cattle's still lower. I think that they got the ball rolling. The production, everybody knows the production numbers give us a reason to be friendly. But you get that bird flu conversation from 2 weeks ago and then last week, and it starts the ball rolling to the downside. And at some point, there's going to be a catch a falling knife type mentality on it, where it's going to start to come back. I don't think this bull market in cattle is going to be as good as it was last year. I think it's going to be okay, but I don't think we're going to be talking about the April 25 contract just shy of 200 or something like that, or $2, whatever you want to call it. But I do think that there's going to be some more upside here. I'm not bullish on cattle. I do think that those upside movements are opportunities to get hedges in place.
Yeah, I think we kind of saw that yesterday, looking at the deferred contracts there in the cattle, that it might be a little bit tighter. You look at those at the herd size out there, and you might have a little bit of friendliness come into that market, but will it be sustained?
Yeah.
I mean, with corn prices, with feed prices where they're at right now, it seems like the cattle market might be okay in terms of input costs here over the next few months.
Yeah, and then I mean, you look at the hog side of things, and last year it was ships in the night, cattle just going to the moon, hogs going to the cellar. It was over. Then it was the hogs and the cattle going up, and the hogs kept going. Cattle fell apart, and the hogs kept going. Now all of a sudden we're seeing a little bit of weakness there. This hog market does a lot of V-type movement, and it can get a little bit scary. This is a market that I think from production standpoint, is still friendly, just like the cattle. So it's a question of where is that support level found, and I don't think it's a bullish market that we're talking like 115, 120 or anything like on the summer contracts, but I do think that we're going into the right time of year to see another bump in this hog market. We always talk about grilling demand and all that stuff. That is the case when you talk about spring and early summer hogs, is that grilling demand does kick up. So going into mid-April and May, we need to see the sun start coming out and the heat coming on. Maybe we could get a little bit of a
little bit more demand come into this market.
Cash has been good. Exports have been really good. And we talked to people within the industry. They're all friendly. So sometimes that's a little biased, but for right now, I do think that there's some upside potential. It's always just the same way as it is with trading anything. There's always that cautionary. If you have profit, don't be afraid to take it.
Yeah.
Don't get so greedy that's where it is, because there's always going to be a chance that it could step back and it could hurt you. But I do think that there's some potential, but I think you have to be very cautious about it. And it's the same thing with the grains. You go back to the grains, and there's potential for upside. It's rare that we take a short position all the way through an entire year.
For the funds.
Yeah. So I mean, that's one of those things you have to watch, is that when the funds start to trend, whatever way they're trending is what you have to be watching for, the directionality of that particular market.
Right. And we kind of saw them buying a little bit there at the beginning of March, end of February, and then kind of petered out. We had a little bit of a pop, and then it's been sort of sideways since.
But if you look at that corn market, that's exactly what we've done. We've petered out. We've gone into a very tight range.
About 10 cents.
Yeah,
that's what you're looking at.
440 to 450-ish on July. And yeah, we've gone below it, we've gone above it, but it's stayed home. We basically almost every single day traded 445.
Right.
So it's there. It's just it's tough, and we don't have a reason for significantly higher. We don't have necessarily a reason for significantly lower.
Right.
And that's what you get when you look at the chart.
These markets need something injected in their veins.
Ice water.
Ice water in the veins. So with that, guys, thank you for joining us. Greg, thank you for coming on. If you guys got any questions, give us a call. No major reports here in the near future. We got the WASI next month, but if you guys need anything, we're available at 1-800-2-MARKET, 1-800-262-7538. Thank you.